Good morning, guys. Good morning, good morning, good morning. How's everybody doing? Somebody give me a sound check. Let me know if you hear me okay. I'm going to share my screen. Good morning. How's everybody doing? Somebody give me does everybody hear me? Testing. Oh, is nobody here? All right, I see you guys joining in. Man, I don't know what happened to the link. Fudge. That really sucks. Was there something wrong with that link that I sent out? Man, this really sucks. Let me just put that in here. Maybe the link ID was wrong. Yeah, it looks like the link ID was wrong. Oh man. Oh man. You know what, guys? Hang tight. I'm gonna let me just resend by email and redo the link IDs here because it looks like the link ID was wrong. Hi, Connie. Hi, everybody. Just bear with me. We guys, we got plenty of time. You guys watching my screen, right? You're seeing my screen. You're seeing some interesting new stuff on here, right? I'll explain in just a minute. But let me. Oh man, I can't believe I screwed up the link. Damn it. Okay, just bear with me 2 minutes. Let me do this properly. So, so people can join. I see people are coming in. Okay, let me just copy this link. What a freaking nightmare. Sorry about that. How can I copy this? Okay, come on, copy. All right, just bear with me a couple of seconds, guys, and I will explain. Shh, quiet. Hang on. Okay, correct link. Save. Control V. This looks like it was. Let me see, make sure this is the QT09. Yes, that's right. Control insert. So link, web page, link, insert, real 36. Make it big. Okay. Continue. All right, guys, Mel is in there. I see everybody is in the room, coming in the room. So just bear with me. I'm just resending this just in case for those people that are not in the room. Oh man, what a bummer that we blew up the link. But I'm glad everybody found me. I got a lot of really cool stuff to show you today. Good morning, everybody. How's everybody doing? Karen, good morning. All right, I'm glad everybody is strolling into the room and finding me today. Sorry about that. That was just that's every week I change the link and I'm actually like, it's kind of stupid, right? Why do I do this? Why don't I do this? I think what I'm going to do is I'm going to keep this link for the rest of the month. Like, why are we screwing around? It's like a recipe for unnecessary error to do this, right? So so I think we're just going to do this. I'm going to keep the Zoom link the same for every single month, and that way we don't have any problems. Anyways, I got some super duper cool stuff to show you because I had this incredible epiphany over the holiday. Daniel and I cobbled together some ideas. I think you guys are going to really like them. And let me kind of just start by setting up the idea. So let's go look to our original setup here. So the principal foundation for almost all the good trades that we have here are what I call on candle close entry, right? In other words, we're always looking, except for the buy sell mode, where that's also obviously working very well. The primary mode, especially like on big breakouts moves, is it's got to hold a level. Now in our setup, it's just basically hold above the buy level for a reversal, hold below the buy level for a continuation trade, so on and so forth. Those are simple, easy to understand principles. But the principal idea was that it had to hold the level. And as I was looking at this like over the weekend, I realized that we used to have long time ago, and Kathy still teaches this setup called run for the OOs, run for the 0 levels, right? And it was basically a concept where, especially in FX, this is super obvious in FX, where if the penny level is broken in the FX, right, 21, 22, 23, 38, 39, there is generally a good chance of continuation. But the setup, the run for the O's, I've always loved the setup, but it was always very kind of a 50-50. It required, it required lots of, like, it only happens in this situation, you got to watch it, and it was always like a very problematic setup, until I realized that the critical component that was missing was the hold on candle entry. In other words, it not only must just touch the 0-0 level, but must hold it, right? It must hold that level. And if it does hold that level, and especially, and this is the other critical criteria that I discovered when we were backtesting all of this with Daniel, is that it has to hold the level, obviously, during the prime trading hours, which we defined as 2 a.m. New York to 2 p.m. New York, which is really like, it's the half day that really where all liquidity goes. Then you have something super interesting. Then you have a really, really viable trading setup, right? It's so in sync with the underlying thesis of basically what we do, which is that, I tweeted over the weekend, and a lot of people picked up on the tweet. They really liked it. I said, traders trade levels, investors trade numbers, meaning investors trade financial data, and speculators trade news. And when you think about, what we essentially do when we trade our pure setup, we really need to be trading levels, right? We need to be trading levels. As a matter of fact, as I'm looking right now, we have, let me just show this to you. If we go into the ES, right? The ES right over here, has essentially shown me a signal to sell the 40 level. So, my point was that I was going to say that the original idea that we developed for FX was basically to trade the penny levels, the 2100, 2200, and I'll show you lots of examples of that. But then we, decided, okay, let's modify this for futures, and let's see if we can trade the 10 levels in the same format. And it really works well in the same way on the futures. Like I've been, I traded. I don't have, it's on my other computer, but I traded NASDAQ. I'll show you what I traded NASDAQ on. I don't know if I can. Let me see if I can log into my NASDAQ. I'll show you the history of my NASDAQ so you guys can actually see this, the history of it. Hang on, let me. Which account is this? This is the other account. Because it's a lot easier. It's a lot easier for you to see the history of my. I think it's the other account. That's the other account. Yeah. Okay. Tiny. I think hopefully it'll show the history, because I can run you through the history of the trades that I did. Yeah, it does actually show the history. Okay, so here's basically I was trading my kind of very, very simple strategy was, if I am above, if I'm in trend, in other words, if price is above moving averages, I'm willing to trade 10 points, 20 points stop. And if I'm below moving averages, like in other words, if I'm doing a reversal, if I'm doing a buy reversal, I'll trade 10, 20. So 10 to the upside, 20 to the downside. And obviously it's not like it works all the time, but the point is it worked. I'm just looking to give you a full history of it. Yeah, here's a full history of it. So where am I? So we start out. What's this? Sell 64 is what I buy. Oh, here it is. Yeah. Okay. So this is good. So let's just start out at 3 o'clock in the morning. There was more trades beforehand, but I just wanted to give you an idea. So here we are. We're on the on the reversal side, right? On the reversal side, and this is basically a similar type of indicator than we have with the buy sell, which I'm happy to give to you guys. It's obviously in just production, so I'm gonna share with you a link if you guys want. Message me after Zoom is done in Slack. And am I sharing the right screen? What are you guys seeing? You're not seeing my screen? Okay, stop share. Hold on, let me stop share and share screen. Let me see what I'm doing here. I don't know what's going on over here. Let me see if I'm sharing the screen. Share screen to. Oh, damn it! I'm sharing the wrong screen. I'm so sorry. Okay. Oh, God damn it. Thank you guys. Okay, let's look. Now you're looking at my screen, right? Now you're seeing the buy sells. Now I'm sorry. I'm sorry. Okay. Okay. So I'm going to start again. The whole idea here, and the best way for me to start again is to show you the exact trades. So to show you the exact trades, you'll understand right away what I'm talking about. So here's a reversal trade. But the reversal trade is based upon the idea. So here we are, we're in a sell mode, right? And the idea here is the candle must hold the 60s, the next O level, the 60 level, right? So this particular candle sends a buy signal over here into the 60s. Actually, it's sort of this one. This one sends the buy signal. So I get long over here at 59. Is nobody seeing my screen? Seriously? God damn it. Okay, hang on. What's going on over here? Oh, man. Okay, let me try this. Let me see this. Let's share. One, two, four. Let me share screen 4. Okay. Tell me if you're seeing, you should be seeing 8. You see me moving around anything? Okay, you see my cursor, you see me moving around, you see euro knock, right? You see euro knock. Let's just change this around. Let's see if you guys can see. You seeing the German? Give me confirmation that you're actually seeing movement on the screen. Okay, all right, sorry. All right, so let's do it this way. God damn it, sorry about this, guys. It's just so annoying. Okay, let's move this over here. Okay, so now, hang on. I'm gonna put this over here. Okay, so now you are seeing the run for the OO indicator, which is kind of a variant of the stuff that I've done, right? Now everybody's seeing this. Okay, sorry. So I'm very, very glad. So everybody's seeing the screen. This is the NASDAQ 1 minute chart. I'm just going to show you a little bit of the history of what I did. It's much easier for me to show you the setup, and then you guys can understand it very, very clearly. So again, the idea is must be candle close, must be above if you recapture the OO level. And the idea is that if you're doing the reversal, you just go for +5 -10. If you're doing a continuation trade, you go for full 10-20. I'll explain why I did that in just a minute. But let's just look at this. So here's a reversal setup right over here. You see there's a buy signal over here. It says buy OO right over here. So everybody just give me a yes to everything I'm telling you, so that I make sure that you guys are all able to see it. And you can actually see the tooltip over here that says I'm buying at 13.1859. Everybody sees that, right? So it's a reversal trade. So basically, I blow it out at +5 right over here, +5. So boom, boom, boom. Okay, sounds good, right? What I do here? I'm not awake for any of this other stuff. I missed these trades. Because I'm basically I woke up super early and I went back to sleep. Then let me show you what I did. Then I extend. I buy. Let me see if I can find this freaking trade. Yeah, here it is. So I miss all these opportunities here because had I been able to trade this, I would have been able to buy this candle. That would have been +10, right? Again, positive trend, so on and so forth, right? I'm in trend, so so on and so forth. And what I did is I traded very, very late over here. I came in over here to buy the 80s. And remember, I'm more practicing the setup than I am really trading at full force. I probably would have held off on taking this trade because it was already a triple, like it was late. I should have been in the 80s trade. I was in the 70s trade. It had a big move. I didn't think, it looked like it was triple topping over here. So, but I just gave it a shot because I said, okay, it held the 80s. And of course, it held the 80s, gave me a false signal, stopped me out. So fine, no problem. You're always going to get winners and losers. Then it gets super interesting here. So what do I do next? So this, okay. So this is where it gets, really, really interesting here. So I get stopped out over here. Then this candle over here, you don't see it because it's actually it was a volatility candle. This candle was super volatile, like huge big move. But I felt because this is the beginning of the trend and because they broke the 60s, it was definitely a great trade to the downside. So I sell the 60s effectively, and I pick it up right over here at and again I chickened out. I should have gone for the full 10. I went for the +5. It would have been a full 10 trade, right? And and it works perfectly fine. And it works really, really well. So then I actually go the second time around where they sell the 40s right over here. Sell the 40s, or excuse me, sell the 50s the second time around. So this was sell the 60s. I should have bought back at the 50s. I bought it at 55. Here's sell the 50s, buy back at the 40s, and I bought that back over here right underneath the 40s, and that certainly worked very, very well, right? So this creates kind of a very, very interesting variant of what we've been doing, which is we trade in a very defined, clean manner. Just we trading, we don't have to worry about the buy sell signals or anything else. We can just trade the OO levels if we want to. It's not, I don't think one is superior to the other when it comes to scalping, which is what this is all about. But where this whole buy sell 0-0 levels really shines is on larger time scales on FX. And this is what I wanted to show you. So on FX, and by the way, the thing about this, and I'll explain this to you guys. We're still obviously, it's written in programming code, so it's just like incomprehensible. But what this is basically, this exponent value, is it can create tens levels, hundreds levels, or thousands levels. So if exponent is 0, it's going to create tens levels. So if I go over here, that means it's going to create, you see how it's creating tiny little, every 10 pips levels for me over here, right? Sells, buys. If I define my exponent as 1, it's going to create hundreds levels. And if I can actually, define it as 2, and it'll create thousands levels, whatever. We can go like on a 4-hour chart. And I don't even know. You can see like it's creating 1,000 levels, 30 against 20, right? Just huge. Like this would be only visible on like a monthly chart, right? So you can see this on a monthly chart. You can see like how this is visible, on this move. And it's actually super interesting, like on a if you're trading for thousands of levels. So here's the monthly chart. It sends it breaks the 30 level. It doesn't show you the 20 level because big volatility, but it breaks the 10 level, and then it goes all the way down to like the 5 level from here, so on and so forth. So you can trade this any way you want, but where I find this super interesting is if we trade on a kind of a longer term, and I'll just put this on a 5-minute chart because we looked at this from a 5-minute chart perspective. On the hundreds levels, right? And does it break the 100 level or not? So I'll just go through here. And here's actually I missed this today. Because I was doing indices. Here's a great example of what I'm talking about, which is here's a sell, the cable was trading, right? And we have it set up so that it has to have at least like 40 points of momentum. right? In other words, it's gotta be coming from at least 40 points higher to be. If it's coming from a very, very low level, it's not, it's not a trade, right? But this thing has got much more than 40 points of momentum. Everything, by the way, here is configured on a percent basis. In this case, actually, I take it back. It's got to have 50% of range, and if range is 100 pips, then it's 50 pips effectively that it needs momentum on. Maximum candle size. This is percent of range. So if range is 100, then the candle can't be more than 70 pips large. That's actually super, super large for for these candles. But what I will say is, what I will do is it should be about 40%, and I'll tell you why 40% of range. Because what I discovered when I was looking at these things is that when you're trading FX, on this hold the level basis, the sweet spot of money is a 40-point stop, 20-point target. The 40-point stop avoids almost all the unnecessary stop outs, but takes you out when you're clearly wrong. And it also gives you a much more meaningful P&L at like 20. So if your win rate, which really comes in pretty close, like there were a couple of trades where there was a couple of pairs like pound Kiwi where the win rate was ridiculous. It was like 87%. But if your win rate is around 75%, you're just naturally making pips. Now we have effectively the ability to do this right now manually, right? Because what we can do is let me show you on the DAX right now how we can do this manually. But hang on, let me just do a DAX chart. Or let me just show this to you on a currency pair. Here, let's say Euro Aussie chart window, right? We can do this on the currency pair. Let's go to the 5-minute chart because that's what I've been using as a stand-up, right? And so Euro Aussie actually freaking broke through the key 56 level, right? 56 level. But let's just for argument's sake, we're gonna set this up in. We want it to be in. Okay, say okay. And we want it to be not in buy sell mode, but let's just say in close mode. And I'm going to say I want it to be in buy of, it should be 5,600, right? But since we're already above 5,600, let's go to the next one, which is 5,620, right? And so it's got to hold 5,620. I'm just showing you how we can do this manually. The stop loss would be 40. To take profit would be 20. We can do this manually, and I hit the buy, and we're sorry. What's going on over here? I'm in close mode. Stop loss 20. Okay, sorry, I set this up. So if this triggers, it's obviously not. It's just a demonstration trade. It's obviously not a trade that's legitimate because it already cleared the 5,600 a little bit earlier today, held that level, and then went all the way up through the 20-point level. Would have made us money. But the very, very cool thing that I just kind of eager to tell you is that we're going to create an automated EA that's going to have all this functionality. It's going to have every instrument here. It's going to have it's going to show you the OO levels, just like it shows you, buy sell levels in the version. And it's going to allow you to, if you want to enable automated trading in the thing. It's going to show you P&L and enable automated trading, and it will automatically take those trades for you, which will be awesome because we will have essentially a whole new stream of potential profitable trades that are much more on an automated basis. Because I've always been really reluctant to run fully automated strategy because I've never really loved any strategy as much as I love the OO strategy, but I've never had the ability to trade the OO strategy because of its essentially break-even characteristics because of the non-closing action. And like putting together these two things, the ability to trade this on a closing basis really gives, especially when I tested this across a lot of different pairs, and I'm happy to show this to you. So just you guys give me any currency pair, and we'll back test this. Just type in any currency pair. We're going to back test this on a 5-minute chart. I'll show you how strong the strategy is, assuming you can euro yen. Okay, euro yen. Actually, I traded today. So it's not even fair. It's not even fair, show. It's not even fair. It's not even fair. Okay, so here's euro yen on a 5-minute chart. Where the frig is this? Here it is. Here was my candle, 1925. I'm a buyer, right? And remember, we're trading 2040. Where does euro yen go? It went all the way out to 27. Boom, boom, boom. Super easy sneezy. Super easy, trade. Nice and clean trade. The critical thing that I realized, there's so many interesting things that I realized in kind of running this. The bigger the stop, the better the profit. In other words, the wider the stop, the less noise stop out you have. So the way you want to trade this is you want to trade small size, 40 pip stop, lots of different pairs. You want to try and do maybe 10, 20, 30 trades a week on a automated basis. And again, you're only trading, the EA is only going to trade the half day that is real, the 2 a.m. 3 p.m. This actually, frankly, I actually shouldn't have taken. I took this trade for myself. This is not a legitimate trade in the sense that it was a non 2 a.m. trade, but it worked. But we can go backwards on this. The problem is, the other thing is, you need a lot of pairs, because as you can see on a 100 pip move, is so slow to, we've had so little volatility in FX, you're not going to pick up a lot of trades on those currency pairs within the time frame. So I don't know, let me pull up something. I don't know, CAD yen. Let's do this. Okay, so CAD yen. So here's CAD yen, 3 o'clock in the morning. This is what, the 15th, I guess. Why is February 15th, 3:05? Is that yesterday? Why is this? Isn't today the 16th? Oh, maybe it was no. How could that be February 15th? 15. What's going on over here? Today is the 16th. How is that 3:05 February 15th? Isn't that? I'm confused. Isn't the market closed? What the hell is going on here? 14. Isn't today the 16th? Why is this not working? This 14, 12. Oh, Jesus. It's not Monday, it's Tuesday. Okay, I'm sorry. Okay, sorry, my bad. I totally forgot it's Tuesday. Okay, yes. So legitimate signal, buy, boom, easy, easy money. Let's do Aussie. Somebody was saying Aussie Kiwi. I wonder if I have Aussie Kiwi in my, I don't even have Aussie Kiwi in my thing. That's, and by the way, I'm trying not to do like the obscure ones, but let's just do Aussie Kiwi. I haven't even looked at Aussie Kiwi. Okay, so the thing is that Aussie Kiwi has just not moved between the OOs for a very long time. Jesus, this has been a flat trade. Let's just go on a 15-minute chart just to give us a little bit more look. And yeah, I mean, if you go on a 15-minute chart, just because I'm looking for for looks. Now, the other thing is, I struggled. Shh, quiet. I struggled with the idea of 2 a. Sorry. I struggled with the idea of 2 a.m. to 2 p.m. universal rule, because clearly there is one class of currencies where the 2 a.m. to 2 p.m. this is New York time, does not necessarily apply, because that's Asian currencies like Australia, New Zealand, maybe even yen, legitimately have flow during the Asian session. I just made it a universal rule just to make it easy. But I think, if you're trading the Aussie crosses, you could say to yourself, no, I can expand my time from 1900, which is 7 p.m., which is like 9 p.m. 9 a.m. Australia, all the way to 2 p.m. New York, right? I could expand that time. So that this is why I'm hesitant about Aussie Kiwi. But if you look at, like, I don't know, you look at let's look at pound crosses. Let's just look at pound Swiss, right? Again, super. Okay, so here's pound Swiss. And again, I'm just using the 15-minute just because I want to compress time, but it gives a good signal even on the pound Swiss. The key thing, as I said, you need a 40-point stop. So I'm short here. I have a 40-point stop, so it's all the way over here. And I'm looking for 20 points, and I hit it right over here in the 77s. It takes a while, right? This is actually, the thing is, it takes 4, 5, 6, 7 hours to kind of do this. Oh, guys, sorry. Let's play a little bit. Where am I? I see on my damn it. We're kind of okay. We're breaking on the 1-minute chart. I'm just playing around here. We broke the 40 level on the ES. So let's play this right now. I like to let's see if I can get filled. I'm a little bit low, but let's see. On the just to show you what I like to trade on this thing, it's a 2-4 stop target. So what that means is I'm going to put my take profit at 8 and my stop loss at 16, which means I'm going to give myself 2 points of profit for 4 points of move. Now, this is just, again, I'm showing this to you sort of in real time. We broke the 40s. The idea is that it should have some continuation to the downside. I'm a little bit late on this trade. And I mean, this may retrace back against me because obviously it's the market open on the move. I should have tried to see if I could get into this around 39s, but we're going to give this breathing space because even if it doesn't work, the thing that I really like about this setup is there's always a decent new trade coming up. Like, in other words, if this doesn't work, we're going to get a change of levels, and that change of levels is on the next sequence, or the next sequence after that, that's going to put the odds in our favor for a trade. On the NASDAQ right now, on the NAS, I'm just looking to see where, if I got trades right now. And on the NAS, I think it's because my volatility filter is set here a little bit too late. Yeah, I want the NASDAQ to be, for these little things, I want my volatility filter to be like 80. And I want to, see if I have, see if on the NASDAQ right now, we may have a retrace trade here in the 30s, but it's got to hold the 30s, If I have a reversal trade here, I'm only going to go for 510, and we'll see, we'll see if that works our way. But we've got 23 seconds. I'm just kind of showing you, variants of how I want to trade this. So I have one potentially reversal trade, one continuation trade off of these all levels. And now, then because we have the market open, it's a lot of volatility. We can kind of play around with this stuff. So, okay, let's buy this. Did I buy this? Okay. And did it close? Oh, no, it didn't give me a signal. I'm so sorry. Sorry. That was stupid. Okay, let's kill this. Sell market. Okay, I'm out of this. That's a dumbass trade. It did not give me, did it give me the signal? Oh, I'm wrong. Okay, sorry. It's super fast markets, so obviously not working. The ES, I'm still staying in the trade. And the thing I was going to say is I really like the continuation trades. The reversal trades are much harder to do. Like you're wrong on the reversal trades quite a lot on these things because you're giving yourself much less room to breathe, right? So it looks like, by the way, if I go back into my ES trade, I think I got done. No, sorry, I didn't get done. I'm still short here. I'm still short here. I'm close, but not, you know, it was just playing. I'm still staying in the thing. It came, what was my bid? 35.75, it came in, just missed me. Just missed me on the bid. While I was screwing around with the NASDAQ, just missed my trade. So I'm gonna stay in this, and see, you know, see if I can, if this will complete, because this is a trade with a broader trend. I sold the big O level here, right? It actually would have fully worked if I was just paying attention to it instead of screwing around with the NAS reversal. But you know, let's give that a shot. Where's my NAS? All right, I'm going to buy NASDAQ just because, you know, now we're in full reverse mode. And let's see if I can actually, where's my NAS? Let's see if I can actually take my, I'm going to go 40, I'm going to go 1020 just to give myself the full breathing space that I want out of NASDAQ. And then we'll see if that works. Because we recaptured the 40. The idea here is, you see how it went the OO level. I think I actually rushed the trade. I can't quite tell. And I should be, I wonder where my, looks like I'm going to get done. I see my NASDAQ gets done on the upside. So that's, you know, just a good example of like, okay, you know, we're going to be in a big reversal mode here. And or maybe NASDAQ hasn't gotten done yet. Did it get done? Yeah, it got done. Sorry, it all got done. Sorry, I was just here. Here's the candle. I'm doing all of this in TradingView because, you know, as you guys know, my MT5 was just having all sorts of issues, so I didn't want to screw around. Anyways, so, you know, here's NASDAQ, giving you a good idea of the big reversal. I know why this didn't give you. This was a huge volatility move. So the real trade was kind of buying here, on this big move. We're still negative, like the trend is still negative, right? And I would have made the money on the S&P if I just focused on that trade as well. So when you're trading the 1 minute chart in the opening market, you're going to have lots and lots of messes if you're not focusing on one thing or the other. One of the reasons why I kind of brought up the FX piece is because it's a much more peaceful, really easy way to trade. But for us, it doesn't matter. You know, like, you know, we can focus and just trade NAS and the S&P, the ES, and can still walk away, I think, better. The main reason why I think one of these we can walk away better is because the P&L profiles here become better when you're trading. You have a legitimate 10-20 trade here most of the time. And frankly, I actually, you know, even though I'm screwing around with a 5-10 trade, it's against the primary backtesting principle that I did, which is that the bigger the stop, the better the profit. You really need the wider stop for you know. It's better to get stopped out big rarely than to get stopped out small frequently, right? It's really what it comes down to, right? So now, by the way, so, you know, we are, it's interesting. I wonder why this isn't, I guess I guess the volatilities of this, where's the ranges here? So this is 50, 30, 40. It's interesting that it's not showing me the 50 range. But here's the 50 range. Let's see if I need to just modify this a little bit. Sorry. Let's make this. Circles. I want the lines to be like this thick. Okay. Just trying to figure out. It's interesting that this isn't. Trying to figure out why it's not giving me a symbol, but it should. I wonder. Maybe it's because the the volatility inputs here are. It should be 8 points, and this. Oh, You know what? Let's make it 10 points. Since we're trading 20-point ranges, we'll make it 100%. Let's see if this will show up. Okay, still too big for these candles, but it will show up on the next one. So here's now we're going to watch and see if it can hold the 60 level. And if it does hold, I'm actually going to trade this, and I'm fully prepared that it may retrace against me quite a lot if it doesn't. But it's got to hold the 60 level for us to really trade this. And it's not so far, so no trade. By the way, so I'm actually just okay. So no trade. I'm actually just curious. So we'll watch this for a little bit. Now this is giving me a sell signal, but it's an uptrend, right? So let's just not take any reversal signals for now. Let's just simply trade continuation signals with a 10-20, just to see how well this is trading. To give you an idea. But you guys see that basically, it's adjusting to the same concepts we've been trading before, just with a very, very clean, definitive level, right? Instead of proprietary level, it's just trading the clean, definitive level, but same idea. It goes from level to level to level to level. Like a good trend is going to go from level to level to level to level. Like right now, we need this. We got 6, 7, 6. Let's see if this holds. Okay, holds. I'm long. Did I buy it? Okay, I bought it. Let's see if I can just put myself into this trade. So I'm going to put, again, 10 points, which is 40 ticks against 80 ticks. And let's see if this holds. So we'll go back here. I think it's like 74 is my target. So we cleared the 60 level. Now it's the next 70 level. It actually went all the way up to here. Will it hold? Obviously, market opening, huge amount of volatility. But my bet is generally that we should have more of a continuation than a reversal. Although first half hour, we're just notorious for not not holding these levels for large levels. But I'm gonna stay patient. I have a 44 stop on this, right? I think I have a 44 stop on this. So I may get clipped on the volatility, and that's fine. I'm doing this much more to kind of show you the process, because the opening market rotation is just the hardest time to trade, because you're always going to get movement back and forth and volatility. But then once you assuming you establish a continuity trend, you can hit 2-3 trades in a row. You hit one level, you hit another level, you hit a third level on a continuous basis. And that's where you capture your profits, and where you make up your losses and capture your profits. So you have to, the point of this is that you have to, when you're trading on this on a 1 minute basis, you're going to have 10 times more losses than when you're trading this on a 5 minute trade every 3 or 4 days on FX. By the way, euro. So let's just let's go to my CFDs. Damn it. So euro. Where is euro? Euro on a 5 minute basis. Euro on a 5 minute basis broke the 5. So we're actually going to go. I'm just going to manually sell this. And I'm going to sell this, and we'll trade this with a 2040. It's going to take maybe hours to resolve, but it's fine. So the copy is going to be 46, and the take profit is, oh no, sorry. We broke the, oh no, I'm confused. We broke, what is that, 21? So the stop should be, no, not 1,500 points, sorry. Stop should be 400 points, level is 200 points. Okay. Okay. And I've put, I've put a stop target on this. So again, my stop is like, in the 40s, my target is going to be in the in the 80, basically 20, 20, 80 as my move. Well, and we'll see how well that develops. But this is the first break of the 21 level we've had in the euro in quite a long time. So definitely worth a shot for us. Take a look at it and see how it's trading. Okay. This thing is still floating, trying to figure out where, if it wants to make the run. But if it does make the run, it'd be great actually if it reheld the 60 level. That would give me a little more confidence that that the market, the market wants to move. So far, it's just not holding the 60 level. Looks like, and I may very well get stopped out on this move because we're just, you can see how it's just running, playing through here. But what's very, very cool is that when you have like a continuous level, it goes from one to the other to the other, right? You get 3 or 4 of these really, really straight, clean, down moves continuously. And I've only looked at this obviously on the future side. I mean, I really primarily looked at this on the FX side because I thought this was a really, really interesting FX structure, right? And that's where I really would love to trade this. On the future side, I think it's it's an interesting adaptation, but I don't think it's in other words, our regular buy sell modes and everything else are just just as good in many ways, because especially on a 1 minute chart. Unless you have like this mental attitude, which I have, because I'm really, really comfortable with trading the O levels, because I used to do this all the time, and I gave it up not because it wasn't successful, because it just was inconsistent. And now I feel like I really, really, really can grasp the concept well for myself on a short-term basis. I'm perfectly comfortable if I get stopped out, I get stopped out. I really I know that if I'm taking 20, 30 trades a day, my chance of being net positive is quite strong, most of the time. Look at it, we just can't hold the 60s right now. It was a really, really nice burst there, but we just we seem to be really having a hard time because we've been running positive for the last 2 days. So obviously, sellers are parked out. Having said this though, the buy bid just stays really, really strong in the NASDAQ, right? The NASDAQ just continues to be still a pretty strong buy bid. And unless we run into some profit taking right now, which very possible. Tuesday generally is always a profit taking day. You kind of still have to stay to the trend, right now. But I will say that that I think that I'll be watching this very carefully, because it's usually a lot of stuff that happens. Unfortunately, when we start trading, the really interesting trade happens like 10 to 11 in the morning. And I wonder, I'm actually curious. I don't know if you guys are open to the idea. We've sort of out of habit been trading 9 to 10, but the much more interesting levels and trends and continuation moves happen 10 to 11. It also helps us avoid the messy market open. I don't know if you guys are open to the idea of me changing Zoom 10 to 11, maybe this week for experimental purposes, and just seeing if we want to trade those times. Jonathan says yes. It actually also makes it easier for everybody on the coast, right? It's a 7 o'clock open instead of because like this is the bullshit. I noticed that for the last like basically 3 weeks, right? All we've been doing is we make a little bit of money. We've been dicking around, but like I make all my real big moves all happen 10 to 11 when we actually have the half-hour resolution. There's like Okay, so everybody loves the idea, so that sounds good. So what I'm gonna do is I'm just gonna adjust the time 10 to 11. Although I gotta say, unfortunately, damn it, I just totally remember. I remember this. I'm doing a show tomorrow for David Aranzabal in Spain. So I don't know. It's going to be very. We might have to just do this. We'll just do this regular time, maybe 9 to 10:15, and then then we'll start after tomorrow. So I can't do it. So I'm not getting the move right now, but still staying in an uptrend, right? Still staying in an uptrend, still kind of holding the level. Let's just basically a huge amount of back and forth between buyers and sellers. The one thing that I sort of wanted to show you, whatever it doesn't, it's just me flapping my lips right now because it's going to move. It's either going to just flush or eventually break out. But this half hour market open is actually the crappiest time. Usually, the irony of the whole thing is we used to think that was a great time to move, but it seems like this is the time where the buyers and the sellers are just yanking it up and down until one side or the other side decides which direction prices are going to go to. It feels like this is the time where they just really yank retail around and make it stop out left and right. And then the real play happens 10 to 11, 10 to 11:30. And then and then we have like a final burst of movement between 2 and 3 in the afternoon. So I think that's probably going to be a good idea for us to change the hours, but we won't be able to do it tomorrow because I totally forgot that I have a commitment. I gotta honor for a show. All right, so this is just putzing around. Let's take a look at everybody loves the Dow. So I haven't looked at the Dow, and where's the Dow thing here? Oh, it's interesting. I wonder where I know why it's not showing up. Okay, let's do the Dow by the hundreds because you can't do the Dow by the tens. It's just a ridiculous thing. So let's do the Dow. Is it down? Oh no, maybe I have it. Let me see what's going on over here. Huh. 31. This is weird why it's not showing up on the Dow. Exponent 1. Let me see if it's just wow, that's weird. Oh, I wonder if I think shit. Okay, I'm glad I caught this. Dow has 1 decimal point, and that is why we got to fix this. Okay, so it's not, the indicator is just not going to work on the Dow because it's a 1 decimal point indicator. We have it from 2 to like 4. All right, my apologies on this. Huh. I wonder if how does this work? Does it work on here? No. It's working on here, but not here. Huh. I don't know what's going on here. Okay. I don't know why it's not working. I'm going to have to fix this on the Dow issue. Looking at you guys are seeing the S&P right now. So seeing if the S&P can hold here, but S&P is clearly testing the lower level here for us. So if this closes through the 40, I will short again. And it looks like it's not the Nasdaq just could not hold the level, right? We're just not it. I'm watching. I'm still in the trade, but they seem to be really struggling on this level. right now. Yeah, it looks like I got stopped out on my Nasdaq, on my Nas to the downside. I wonder how did I get stopped out on this thing? Did it? I must have. Wow, it must have just really. Oh, it just popped to the downside. Okay, it's fine. On the other hand, let's see what's happening. Nas is coming back up. Wow, this was just a really nasty little slip, and we're holding back up. Still no real legitimate trades here, so I'm not doing anything. I'm watching. How much time is this? 18 seconds. Whoa, this is really showing some. It's gone through two levels here, so let's watch this. And actually, I would definitely want to go sell the. Okay, so I sold the S&P. Let's just set that up properly for 2, 8, 12, 16. And maybe I should just watch this for the move. And now screw it. This is a huge, so I sold it even though I didn't have the signal here, because it's so much volatility. This was a huge volatility candle, right? Sold the level, I'm screwing around, basically, assuming that we're going to have some continuity to the downside. Hard to tell, honestly, hard to really tell here. It's just basically, it's really nasty little take me up to the upside, take me up to the downside moves on the market open move as it tries to figure out whether it wants to go higher or lower. Jesus, all right, and I'm getting blown out on the Nasdaq. Okay, I'm gonna get long Nasdaq because now it looks like we are finally starting to run the OOs. I'm late on the move because I'm getting sliced both up and down. But if it holds the 60s, I'm going to assume this is going to be a breakout level. I should have taken the 50s, but I was watching the S&P to the upside. No, it's really today. This is like the classic, just like let's kill me both ways move here. This was the move that would have worked to the upside. I was just late on the move. Now, again, I'm just getting stuffed to the downside. All right, I'm gonna have to get out. I'm just gonna get out. It needs to hold the level and give me a signal. Otherwise, I'm not taking any more stupid moves here. And what time is it? It's 10 o'clock, which is like when it finally starts to really show this is exactly what I'm talking about. That really starts to show its true face, right? So far, not holding the 60s, not really doing anything. So we're going to just leave it alone. So this will be an interesting candle. If this candle does hold the 60s, that should be a legitimate signal to the upside. Wow. Look at it move. It's literally been 50, 60 the whole time. Just, this is like the nightmare of this strategy, which is like every breakout is a fake out, which is the morning price action. That's actually good to see that, because that is where the strategy totally fails, when it just gets trapped inside two levels and doesn't want to move. So when that happens, you obviously want to step back. But most of the time, it's really not holding those levels in any. It's basically piercing them, but not holding them. So it's keeping you out of the trade most of the time. That's the whole idea. But on a 10 level basis, 10-point basis, it's very, very easy to to get flipped out a couple of times. Okay, I'm going. Nope, I'm not going, because it didn't break the level. Okay, no levels, nothing. Okay, where are we going back up? Nope. Wow, we've been in a 10-point range or a 20-point range the whole opening out, which is like, remember how unusual that is? Because we usually have nice 40, 50-point ranges, right? So this is really, really slow. Let's just see, okay, is this finally going to give us a signal that's going to be legitimate? Seems to hold the level. Okay, I'm selling this market, and now I got to see if I can capture the 10 points here. I'm going to go 40. All right, this is the first post 10 o'clock sell signal. Still really not giving me any continuation. Just give me both ways, right? Just a complete yank both ways. Really been a very, very tough tough demo of what I wanted to show you. But on a 1-minute chart, this is the problem. When I'm stuck inside a range like this, I'm going to get stopped out 2, 3, 4 times in a row. You have to either accept that fact, or just give yourself time to see if, once the range starts to develop. So I'm forcing trades here to show you the idea. But obviously the idea today is just in a regime completely hostile to what I want to do. It actually just gave us a buy signal, right? So now I'm in a trade that is opposite of the most recent signal, because the signal is just completely reversed on me, left and right, and that's going to happen on such a tiny time frame, where you have very little ability to kind of give yourself space to establish the move. But I'm going to stay patient with this. Let's see if this is eventually going to crack to the downside. I don't even know where I'm at on my trade. Oh, here I am at 37.50. So I got to go to 37.50. This is still a long way away. Where'd it go? It went to 43. So not much. It's still, it looks like today is just going to be one of those days where we have no direction. Markets, it's a real fight between the bulls and the bears. So this may be yet another fake breakout. But let's just stay a little bit patient here. Let's see if we can establish. We see the moving average is starting to curl over. Maybe the market is finally starting to establish a little bit of a directional bias. You can set this up on. It's not an MT4 indicator yet, Galton. It's just a trading view indicator. Right now it's in development stages. So I'm kind of demoing it on a development stages basis. But looks like I'm getting close. Come on. I'm going to stay patient to this. Boom, I'm done. So by the way, notice how zen I am with all this shit today, because one of the things that I kind of realized when finally broke down. And now, by the way, what time is it? Oh, what a surprise, 10:10. We're actually starting to see directionality. So what I was going to say is, with this type of a setup, you really just got to let it go, target to stop, no early exits, no bullshit, because if I'm going to recapture the massive churn losses I had here, I better let these trades play themselves out. And by the way, the ES trade would have also worked over here. Why didn't this show me a? I'm trying to understand why the symbols, why the sell buys. What is going on over here? This should have been a sell. Why didn't this? Oh, was it a retrace? Oh, I know what it was. I know. Really? Let me just see something. I'm sorry. Let me just see something that maybe it was the retracement level. If I put 20, because I'm trying to. Yeah. Okay. Sorry. It's just it's compressing the retrace level. Okay. Yeah. So there's like a couple of variables in this thing that are sending it one way or the other, which is making it difficult. So this would have here's the thing. Remember this was a sell through the 40s. They just clipped me out at 45s, right? And there was a secondary sell right over here, right? That again just clipped us out at like it actually I should have had if I had my stop at the proper +4 to the O level. This is the other thing that you have to do, which is the weakness of this setup, but you have to accept it. The stop has to be plus minus to the level, not to the actual entry. You're obviously going to get slipped on the entry. So if the entry is like 38, then your stop actually becomes larger, and you have to just trust the fact that the win rate is going to be that you're going to get stopped out by having that larger. As I said to you, having the larger stop, you're going to have less stops. So, for example, had I taken this trade with a proper stop, but I was just basically just trying this out, I would have been able to survive it. Would have been able to make money on this one. We obviously made money on the on this one. It's a work in progress. As I said to you, on the very, very short-term level, it is definitely a very, very clear trade on the longer-term levels, because it creates lots of really interesting opportunities. Like, for example, the euro trade is a little bit down against us. It's like 11 points against us, but it doesn't matter because if you were just trading I don't know, the currency pairs that triggered today, which is, and I'm looking here, where is this? So Canada did not go through 27s. Yen didn't go through the 5s. Aussie failed today. Aussie was actually a really interesting trade. Aussie did trigger right over here and completely failed. So that was, it's a legitimate fail, not a problem. Kiwi is actually, so this is where it gets interesting. So the one trade, I'll leave this with you guys to watch. Sorry, we did this on a 5-minute chart. Kiwi, if it breaks the 72s, and holds it, becomes a very legitimate sell trade for 71.80, 72.40 stop, right? And so that's another one for you guys to watch, to the downside. Swissy worked, right? Like I missed the Swissy over here, but Swissy worked from, what is this? This was like at 835. The 90 level and it went all the way up to 90.28, right? So the Swissy worked really, really well. So the whole idea of all of like this stuff is that it needs to be on an automated basis. You need to have like a big portfolio. The EA's got to run it essentially, for you. But if you can do all that, it really creates a super interesting, very, very attractive, income stream portfolio of this whole O level, which originally always has been the domain of FX, because in FX the penny levels are always very important, right? When we're trading, let's look at this. So we're breaking. I'm looking at this. What do we do? If we break the 20 level here, we have another sell signal here, right? Assuming that we can break the 20 level. Oh, sorry, this is a 5-minute chart. Let's go to 1-minute chart. Boom, 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 boom. So we're in a negative trend, and I'm looking for it to break through the 20 level. And if it takes the 20 level, I'm going to take another sell with a 30 stop and a 10 target. Let's see if this works. But so far, no. So far, it's kind of holding this double bottom against the 20 level. We sold. What do we sell? We sold the 50 to basically buy underneath the 40s, and then it actually sold the 30 level, right? And it came all the way almost to the 20 level over here. So that would have been another trade. I just, this is what I was going to say to you is that once it starts cranking through the levels, you can get 3 or 4 trades in an hour. So you have to survive the churn, and then trade the trend when it shows up. Now, on the other hand, if you got a double bottom here, and now we're holding the 30s, right? I actually want to be a buyer here, and because now I'm going to try and trade the reversal trade, because this is actually a pretty decent reversal trade. We had 3 or 4 signals over here. We held the double bottom. Let's see if the reversal trade actually works, because we know how much of a reverse trade this whole thing is. So I'm going to go 40, 80. Let's see if it goes to 42. And it looks like I'm done, and boom, and there's the reversal trade. So last two trades of the day at least justify my existence. But again, as you guys see, that this is absolute disaster for the strategy, and the clean, clear either V-shaped recovery or a clean, clear trend is a great time. So you generally, the whole point is that the opening rotation has been a sort of a very, very crappy little trade for us, right? What happens, I noticed, by the way, in effect in futures, is that we get these. If we go back to where's Asia? The 2 o'clock, the 2 o'clock move is usually always a great move. This is European Open. So if it's 11 o'clock at night in the West Coast, 2 p.m. in the super early 7 a.m. in the morning New York. The levels here just simply slice through over here continuously. It's a continuation trade all the way over. Really, really great trade. And then the opening of Asia, this is the opening of Asia around 8 o'clock. You see how boom, boom, boom. You have 3 or 4 levels, except from 7 o'clock, 1 level, 2 levels, 3 levels of buying. So I mean, the strategy is a great strategy as always, as long as you stay in a regime positive structure. And what is a regime positive structure? It's one where you have a stair-step move up, stair-step move down, and you avoid the churn. The churn is part of life, so we have to we're gonna have to accept the churn. The whole idea is to minimize getting caught in this thing. I got caught like 3 or 4 times on not even legitimate trades, just demoing the trades out. But the beautiful thing is, as I said, once you you kind of grasp it, whatever you lose, you can quickly make back as long as you stay in sync with the regime. And it's a very, very clean, clear direction of how you want to trade it, right? So I just, sharing this with you if you guys want to experiment with this thing. I will be happy to. I got to talk. I'm going to talk to Daniel just 1 sec, because before I publish this thing, I got to make sure that for some reason I'm trying to understand why the CFD wasn't showing itself up on the chart. And once I do that, I'll be able to release this to you guys, and you guys can have the link and you guys can use a trading view. But ultimately, the goal here is really to create a self-perpetuating, self-trading EA for FX, which can give us 3, 4, 5 trades a day on the OO level, which would be really, really cool. I hope you guys will really like that. So, by the way, you see NASDAQ, playing around, trying to now recover the 50 level. And this is where it gets interesting, by the way. So, we've had the sell-off, we've had the comeback. Market's still really undecided as to which way it wants to go, kind of a little bit negative on the move. But now, we're trying to recover. And again, the clue as to whether we can truly have a bullish move is if we hold the level, right? So do we hold the level, then we have a continuation trade. Right now, we actually can't hold the level. So I'm just watching this very carefully. But if we hold the level here, if we get a buy signal, it could be yet another interesting trade to the upside for us. But we've got 30 seconds. It's a long time to go. So hopefully you guys found this a little bit interesting. It took as always, it takes a while to get comfortable with this trade, but eventually, it did pan out for us for the last couple of trades. Watching this right now, by the way, it's kind of interesting. This particular move here, and today is again a really horrible day because Tuesdays usually are always these profit-taking days, and especially after the holiday. See, again, did not trade the 50, so it would have been no signal for us. But it seems to be like it wants to build, wants to try to make another run for the highs here as it builds. And what's cool is that you can see on the indicator is that how price moves from one level to another level to another level. And I think that's sort of super interesting for you guys to enjoy, I'm watching this right now just to see if it kind of holds the level, but anyways, I got to run, so I can't really hold on to it. Any questions? Anything else, guys? Let me see if this is gonna. I'm gonna take this trade, but I'm gonna be offline on this trade. I'll let you know if it works out. I'm gonna take this trade to 40.80. I'll let you know if it works out. May not. We'll have to see. The couple of sort of very obvious drawbacks of these kind of trades is that, and when I do this for myself, honestly, I wait on the retrace. I don't chase the full. I don't try to buy the top tick. I kind of wait for the retrace move. But I just wanted to I wanted to demo the trade in real time. When you're just buying market, you're almost always going to top tick, and there's going to be lots and lots of retrace against the move. So that's the drawback of any breakout strategy. But the benefit of the breakout strategy is if you're catching yourself into a trend move, you should be able to go from level to level to level. Although, as you can see, this is still struggling. We're still struggling, and this trade may completely blow up on me again. And that's how it is today. Today is just one of those kind of days where we're not going to have a big continuity day if it doesn't really work. But it's following the rules. It's on the right side of the move, and more often than not, this is a trade that should really, really work for us. Maybe it'll even work right now. We'll have to see. I'll let you guys know later. All right, I got to run. I'm sorry, guys. I got a meeting. I got to go to. Hope you guys enjoyed this. There's no EA on this. It's all experimental, Raphael. I'm just showing you just experimental ideas today. Today was just kind of really all experimental for all of this. So I'll see you guys later. I'll see you tomorrow, regular time, unfortunately, and then we're gonna go to like real post 10 o'clock trades when things really work for us. Okay. Talk to you later, guys. Bye bye.